the accounts receivable value is 5,000 greater than the right hand side. Simply 16,000 minus 5,000. Answer would be 11,000. So it means the customers paid us 11,000 cash this year or this month if this is for 1 month, 1 week for 1 week, or 1 year for 1 year, right? It depends upon the amount of transactions during the year, during the month, during the week, or it's like that, right? Similarly, with the accounts payable, you can also extrapolate. If you are given 3 things, you can also extrapolate. So if we don't pay to our suppliers, our liability increase. So that is the normal balance. If we pay, it means accounts payable or liability is decreasing. So if you want to find out how much cash we already paid to accounts payable or supplier, you see the right hand side of the accounts payable. You are given the 3 things, you can find out the 4th one. So 9 plus 9,000 plus 6,000, answer is 15. 15 minus 11,000, answer is 4,000 we paid to our suppliers. You can also find out. This is the analyzing the account. If you are given any of the 3 values among the 4 one, you can extrapolate or you can find out the 4th one through balancing figure as well, right? Now, can errors occur? So there is no room for errors in accounting, because when there is a judgment involved, then there are chances that you make a fraud, right? But since we are humans, that doesn't mean that we are error-free. Computer can be error-free, but we cannot be error-free. We make some kind of like errors. So it's logical that if some things are missing, okay, we missed an entry or we missed an account posting something, that's why our balance is not correct. So you can just trace out general ledger, right? You can also find out whether you posted a double entry or not. You can just find out that, for example, you wanted to post to the credit side, but you post it on the debit side, right? So 300 you wanted to post it on the debit side, you post it on the debit side. So in order to remove the effect of this one, it means you must, in order to be on credit side, you must put 600 on credit side so that the balance would be 300. So the debit side is 300, credit side is 600. So the balance would be 300 credit side. So this is the what do we mean by doubling it? So if the question occurs, then we will find out, okay, what's going to happen. So then just don't worry about that. Similarly, divide out the balance by amount 9, which means if you forget, you wanted to post 400, instead of 400 you posted 40, right? How much you still didn't post? So you can also find out the multiply by 9, it's mean 30, 360, come on, 360, 9 into 4 times 360, you didn't post, you just make an entry of 360, that's it. So it's just, don't worry about this stuff. When the question occurs, you will automatically understand that. If you understand the concept of debit and credit, then you can realize that, okay, where we make a mistake, and then you cannot omit or you cannot delete the mistake, okay? You need to adjust. For example, if you make an error of, so this is debit and this is credit, okay, you posted 400 here, there is 400 here, and like but if you, for example, you wanted to post the credit side, so original amount was that you wanted to post, so that is basically a credit balance. A credit must be posted on 100, but you posted, right, you posted 100 on debit side, right? So it doesn't mean that, okay, you just remove it and just put 100 here. This is not permissible under accounting. Accounting, once you have posted, you cannot delete that one. So you need to adjust. What is the adjustment of the error? How you adjust it? So in order to do that on credit side there must be 100. So you make a new entry and you may say, okay, this is error, adjustment for error 200. So when you put 200 here, see the balance would be 100 credit, because 100 times bigger than the debit, 100 amount bigger than the credit, right? So this is how you do the entry. Okay, now let's so here we go. Chart of accounts. So these are the list of accounts that a company has. So normally when you start accounting systems, you basically make first of all the accounts. Okay, any entry, any kind of event occurs, they hits one of these accounts. So these belongs to liability account, these belongs to stockholder account, this is belong to sales account, this is the expense account, this is basically the assets account. Okay, if anything happen, for example sales return, you don't see any account of sales return, but sales return happen, right? It means you cannot violate company's chart of accounts, right? Because there is no sale return account here. It means you must find out the account in which you can put. So sale return would be recorded in sales revenue as a negative sign. It means sale return means the sales going negative, right? If there is a sale return account, then you cannot put on sales or revenue account, you have to put on sales return account. So anything happens, sorry, if anything happens, it must affect the company already prescribed the accounts, right? If you need a new account, like we don't see any account related depreciation here, so you need to make an account with approvals of like accountants, with company approval, board of directors, and then you open. So what does it mean by these 101, 111? So these are basically the codes. So in accountings, these are the codes. So there are a lot of registers, right? A lot of files, a lot of systems, right? So you just, when you close down that book and place it on the shelf, so you know that the book 101 means if you are searching the cash book, so you just go for 101, you just take that cash book out and then you write it down in the cash book. Or if you are using the computer, so you can also find out that, okay, rather finding out on the search button, writing down the cash, just write 101 and press enter, the cash account will open. So these are just basically the code for the accounts. So chart of account means, so this is all the possible accounts of a company that in any event, any transaction occurred, so at least two of these accounts will hit. So you cannot create from your own any account. You must have prior approval, otherwise post the account of any of these already prescribed accounts. Okay guys, so normal balance, like I told you, assets normal balance, always talk about the plus sign. Sorry, dividend is also plus sign here. Revenue plus sign. So normal balance, if question is silent about the balance, so assume that this is a plus balance, which means debit. Okay, the normal balance of liabilities is a plus sign, which is credit. Normal balance of stockholder equity, credit. Common stock credit, retained earning credit. So normal balance of dividend also plus, which is dividend increase. You just Remember, like the dividend increase or decrease. Everything is about increase because this is the normal balance, right? There's a balance of salary expense 10,000. Question didn't mention that it is credit balance or debit balance. Assume the normal balance, which is debit one. Okay, up till now we have just talked about the T accounts, right? But there are two kinds of format of an account. T account, in D account we just learned that, and there's a 4-column account. The 4-column account is that you have one column as a date, and then the items, you written down the some kind of like narration here, and then the debit credit, and the last column would be the balance column, right? So how this balance column basically simple. So you make the entry is on April 2 entry is debit 5,000. So you is there any entry on April 2? No, the balance is debit balance of 50,000 because debit is greater than credit. Similarly, on April 3, there is an entry of credit 40,000. So we have the balance, which is debit balance, and now debit balance is how much greater than the credit balance? 10,000. So you write it down to 10,000. So basically, in T accounts, we find out we write it down the balance here at the end of the period, for example, after 1 week, after 1 month. But in 4-column accounts, we write it down the balance transaction wise. Any transaction occur, what is the balance? Any transaction occur, what is the balance? It means this is the balancing out on every transaction on day-to-day basis, right? So lucky we are just focusing our focus on just T accounts. Okay, but just gonna tell you that okay, there are some other kinds of format as well: 4-column balance and T accounts. So why we are focusing only on T accounts? Because the biggest advantage of T account is that T accounts allows managers to analyze transaction quickly. Why? Because every account has at least 4 entries, and you can find out if you are given any 3, like we just found out in accounts payable, account receivable, and cash. You can also analyze the account quickly, right? So this is the example. We don't have much time, time's out. So just pause the video and try to solve by yourself, and you can easily find out the answer. So this is assignment 2. I would be uploading on both platforms. Please guys respect the due date, and remember, it must be handwritten, and I'm giving you the exception of ePen as well. If you have ePen, like I am having a ePen, you can also write it down through ePen as well. And remember, when you submit the assignment, please follow this syntax of your name, and then student ID, then accounting, and then assignment number. Right, guys? If you have any question, then this is a perfect time to ask. I will be answering your question after this recording. And if no question, then we are going to end our discussion here. Okay, no more question then. Okay, see you next week. Please respect the submission date. Until then, take care. Bye-bye.
Wait, sir.